Welcome back. And as James pointed out, we're living in interesting times. As we speak, there's a press conference going on at the Rose Garden at the White House, announcing the entirety of the tariff plans from the current administration. And we just heard about a confirmation that 25% will be applied to all automotive, all cars coming into the U.S. And also interesting news of the day is that Tesla had its quarterly delivery number issued at the beginning of the day, the market day. So interesting bookends to the trading day today, specifically in the automotive space. Let's say the ride part of Ride AI. But we're here to talk about more than that. We're talking about capital. We're talking about the long term. We're talking about where resources will go in the next few years. And in the AI, specifically the AI part of Ride AI. Obviously, it has a lot to do with rides. It has a lot to do with vehicles. But we want to focus on particularly the emerging market for autonomous. So we have a great panel. We have folks who are actually both in AI and in vehicle and in automotive. But we want to start off with this question of capital allocation. We've seen a lot of private equity going into this sector. We've seen a lot of investments in startups, but and some of the incumbents as well, strategic funds. But what are we looking at in terms of IPOs? What are we looking in terms of actual exits from this space? It's very tricky. And so I put it to the panel. Do you see increased activity in IPOs, either domestic or international? Are we going to look forward to a boom in essentially the exits of this sector, and thus leading to additional investments?
On autonomy, right? Autonomy. You're talking about
exactly. The autonomy, the AI part is.
It was pretty vague otherwise. Yeah. I mean, from my perspective, I cover Tesla, and it is almost like its own little IPO because look, the auto business is a fraction of the entire market cap. If you even value it, it's probably half of my price target, which is like $75, right? So, I mean, it already is kind of an autonomous company at this point if you think of valuation. I think fundamentally, though, there's not many players. I think that's what's kind of fascinating at this point. You have this debate between Waymo, which is clearly kind of leading when so many cities they're in, and then whether Tesla can do it with the vision-only approach. And, that I think is ultimately the debate. And we'll see if others could catch up. I do think there's some startups, and I think particularly on level 2 and level 2 plus type technology, we could see if other people, break way. Maybe even Cruise, inside a GM could do something similar, but IPOs, I don't know if I see too many. Waymo would maybe be the one Ken could talk about. So,
yeah, Evangelos.
So I'll say that venture investors have learned an interesting lesson here over the past 10 years, and some of it they've learned on their own, some of it in conjunction with the corporate venture funds that came to the space. But what the lesson is that particularly when you're talking about autonomous mobility, this is not a venture play. It requires too much money, and frankly, even when I think of what other investment channels we have for this, I can see sovereign funds playing a role. You see it already in the Middle East. I can see actually the technology side of corporate as opposed to the automaker side of VC of corporate VC. I think companies like GM or Porsche or BMW that still have venture funds, they're not looking to invest in a wholesale manner against a full stack autonomous vehicle company. Now, I see a lot of appetite, as I said, from technology companies. Maybe Amazon is the most recent entry in that, but not on the venture side.
Not a small capital, therefore not a small company. But Ken,
So I would say that unlike private investors have a longer horizon, I would say public investors have shorter memories, but not that short. So we still remember 2021, right? The bankers remember it. The public investors remember it. They remember how all these, whether it be, hyper local commerce, quick commerce, all of these and there was a huge capital raises, big IPOs, and most of those companies were not successful. We've had obviously a couple real big survivors, Uber and Lyft, et cetera, and DoorDash. But the point is, I don't think there's an appetite right now for those kind of capital intensive endeavors. I do think some of the more capital light software enablement type technologies, that's probably where we'll see the activity.
and a lot of this is going to get driven by potential, what we call unit economics. This is coming also from previous mobility ventures, micromobility, where I'm very familiar with. So we've been thinking about how does the economics work on a unit level? Are we talking about, as previous panels pointed out, a dollars per mile reduction and efficiency gain in terms of what consumers perceive as their cost of mobility? Or are we talking about the sort of potential growth in the whole market, more people taking more rides? How do we think about the business of AI and mobility? Is it Waymo is one of the pioneers who's thinking about it as, we make drivers, and drivers get wages. So there's a logic there. But is that what Tesla's going to do? Is that what others are going to put forward as their logic, as the business logic, as Tesla comes from a different unit economic basis? How do we think about the business of AI?
So back in 2000, I published a book which is called Transportation Transformation, and I was looking at the role of AI in fleet-based mobility, particularly urban mobility. And one of the points I was making in the book, and at that time it was still more of a vision as opposed to a lot of reality, I identified a number of deployment models, right, for autonomous vehicles. And the model can be both how you organize your fleet. In other words, are you going to have a completely vertical model where you have the vehicle, you have the technology stack, you operate the fleet, you manage it, you maintain it, or are you going to take a more hybrid approach? And if you look at what Waymo is doing today, they're testing a bunch of different models. As the speaker said earlier this morning, they feel pretty comfortable with the technology, and I think they have every right to. But now they're trying to understand what is going to be the business model. Now, in addition to how you partition that entire stack, there's also the city plays a very important role. So how you deploy in Atlanta is going to be very different from how you deploy or could be very different how you deploy in Tokyo, for example, right? Because you need to think about what is the density of the city, what is the terrain of the city, what are one of the pieces of work that we've done recently, because in addition to investing, we also do a lot of advisory work and develop IP, is what is the private car ownership in a particular city influences also how acceptable ride-hailing is, and by extension, ride-hailing using autonomous vehicles, right? So there are many different dimensions that will define the so-called unit economics, and I don't think we have the answer yet.
So maybe I would say, remember, just perspective, during the Lyft and Uber IPOs pre-COVID, the promise was driving down the cost per mile and replacing car ownership in many cases, right? You used to have 2 cars at your home, now you have 1, right? It's not quite the way it's worked out, right? And so instead, prices have gone higher. Like, as I go back to my last point, industry structure has improved, meaning rationalization. Economics have improved for the 2 remaining players, Lyft and Uber. It's become a 2-player quite, I would argue, quite rational market, 70-30 market. What is scary to public investors, and has been scary to public investors in the rideshare industry, is that industry structure is poised to change. Waymo, most notably as an entrant, the potential for Tesla to be an entrant. But just to level set everyone, think about this as public rideshare in the U.S. or human rideshare, I should say, in the U.S. It's about $21.50 or so, $21 to $22 is the average cost of a ride. And those companies make on average about $2 like around $2.50 in contribution profit on a ride, right? That's the way it works. And so when we think about potential disruption and change in industry structure, we think about where can Waymo operate today, and we assume that it's probably a modest loss on a per ride basis
at the pricing of $20
at that same pricing,
Same price.
right? And this is why Tesla has been so scary. If it's safe, to be clear, if it's safe, it's so scary because Tesla could earn potentially $7 to $9 in profit per ride, and that is very scary and destructive.
Couldn't they just lower the price, increase?
Well, that's the fear. Again, at that same price point, they could either lower the price or earn much greater profits. But that's the scary part.
So, but how are you getting to that $7? Is that based on something that Tesla's communicated, or are you
Well, it's our own work, but I would say, if you think about if you think about human rideshare with a physical driver, the driver takes about 70% or so, right? And after you work through insurance, which is about $3 per ride, and some other taxes and tips and fees. You end up, yes. And one of the big issues is, and as you think about, Waymo has had improving contribution margins on a per ride basis and is really driven by the vehicle cost, right? Because we estimate today, unfortunately, our guest this morning at Waymo didn't share the new numbers, or the new platform. We estimate that the cost of the vehicle all in with the sensors was about $175,000. And now is down to about 125, between 125 and 150. But net result of that is, with about a 3 years useful life, that really contributes to a lot of costs on a per ride basis.
It's going to be a killer on that one, right?
Absolutely.
Premium car, it's a Jaguar.
Yes.
Obviously, they're probably layering on top 30% more cost due to their sensors and compute.
Yeah,
right?
Sensors are a big component.
Yeah.
Yes.
So, you're
ultimately
the Tesla analyst. So,
I mean, that's the big difference. I mean,
Right.
Tesla, theoretically, if they could do it with a camera, we're talking like a $30,000 cost of a car at the base level, because you're not adding all that incremental sensor cost. And I think that's ultimately why there's this big debate between vision only and whether multi-sensor approach is right. And to me, just like covering the space for so long, I mean, it is fascinating to see the conversation. I remember talking to people 10 years ago, it was all about, can this be done from a tech side? And to see those same people go through the unit economics. And I think that's the problem that AV is facing, is that people are starting to realize that it is a lot harder than you realize. It's a lot harder. It will probably never work in a rural area. It has to work in a city where you could pick people up, and it's actually hard to get utilization high, so you can sweat that $100,000 plus car and get your money back. So it is fascinating to see the pivot.
Evangelos, you actually wrote the book on this. So literally, what's your take on the possibility that this actually will work out of the box the way Tesla assumes it will?
I'm not holding my breath, but I was also going to say something that we see in the application of autonomous vehicles in other spaces, right? Not necessarily the robotaxi use case. Don't ignore the teleoperator. So in all of these companies, even though they say we don't have a driver in the vehicle, it's not that they do not have somebody who is driving the vehicle if something goes wrong. And it's not only, we talk about disengagements, but it's not only the disengagements that can go wrong. Something can get stuck and require, some push from a human to get unstuck. And so one of the things that we look at is how many vehicles can each operator monitor, right? And the number is not very high right now. Okay, so that maybe you're paying that teleoperator less than you're paying the physical driver who is in the cabin of the vehicle, but it's not that this comes for free.
Yeah, we discovered this also with sharing and with micromobility, is that the hidden costs often end up being the dominant issue to profitability. Either it's because due to vandalism. We've had a lot of issues with people damaging vehicles, and we also had city-imposed tariffs, taxes, whatever, and restrictions based on the sort of legal frameworks that are involved. We'll get to that in a moment, but I just want to point out that these unit economics are extremely difficult to get right. I think at the end of the day, they end up always surprising you, and the game is always changing on you based on real world constraints.
Let me make one more comment, if I could. I think, and we're seeing as we're gearing up to Tesla's Austin reveal, I think that Tesla will learn a lot of lessons that, in the same way that they have learned lessons with other attempts to introduce their various systems in the wild. That's why I made the comment that I'm not holding my breath, because I think we'll be hearing things, and maybe there will be a repeat of the lessons that Waymo learned, or even Cruise learned, for those of you who remember. And now Zoox is learning in Las Vegas.
Yeah. To that point, I want to ask a more architectural or let's say zooming out a bit question, which is we have two examples. Obviously, we're using as the proxy here. We have Waymo, we have Tesla. Obviously, there's folks in China who are doing amazing things as well. But fundamental to this question is these two represent either partnership model where you work with, as a provider of drivers, you work with a provider of cars. Or in the case of Tesla, it's much more, we're a provider of cars, we're going to get into providing driving. And in some ways, one is modular, one is integrated. And we've seen that before. We've seen that with phones, we've seen that with personal computing, like Microsoft versus PC makers versus Intel coming together and forming an alliance, if you will, a standard. Do you anticipate one or the other model going forward? Does it make more sense to build drivers than to build driving cars, I guess, is my question. And is this going to get settled quickly, or it will take a while? What do you think?
But I think in the near term, I think the integrated approach for full, like level 4 or 5 self-driving, I think it does make the most sense, because you really do have to integrate the sensors in, from my understanding. Longer term, we'll see. I think, and I'm very skeptical on Tesla's approach with vision only. I actually do think for a safer vehicle, you need multi-sensor. We'll see, though. I think with that vision only, maybe you could get a good level 3 type system. And I think those could be things that other companies can drop in, and actually that could be an opportunity in the near term. I think you could, I think ultimately you could probably do a good level 2 plus, maybe level 3 without a custom solution. But I really feel like for a full robotaxi, you'd probably need an integrated
solution. One thing I could add as an anecdote here, we all know that Apple was intending to get into this space. My understanding is, this is not particularly inside info, but my understanding is that it was predicated on self-driving, and they didn't see progress fast enough, at least on their side. But definitely they would have gone in on an integrated logic, because they would have made the car and the driver. And historically, that's the DNA for Apple, and it seems to be the DNA for Tesla. But again, it's not clear to me that that's the right way to do this. Any other thoughts?
Yeah, so I look, Colin weighed in on the technology side. I would say on the business model side, we're seeing differing approaches. Today, Waymo is approaching different submarkets like San Francisco on a 1P basis, meaning only all the demand generation happens from the Waymo One app, right? And then there are other markets like Phoenix or Austin, which just launched in partnership with Uber, where they bring demand. Ultimately, our view is that you'll have players like Waymo. I don't really believe they want to be in the hardware business long term. I think the way to scale this is ultimately there are other owners of the hardware. They own the software, they own the system, and there are multiple sources of demand, right? And so I think that's really, really critical. As I think with the rideshare companies, Uber and Lyft, I think that's the future they're betting on, which is there are multiple providers of AV technology. Some are full stack vertically integrated. In the future, maybe there are software developed approaches that work with existing OEMs. That's the kind of the nirvana future for rideshare, because they bring the demand. There are multiple suppliers. That's the right industry structure for them. The scary part for rideshare is one or two full stack integrated providers who are then really those players would be competing on the demand side as well.
Okay. I think the transition that Waymo is about to make from the Jaguar vehicles to the Ioniqs, the Hyundai Ioniqs, it's going to be very important, and because we will be able to see whether the tech stack that they have translates well in the geometry of that vehicle, and whether they need to make changes in order to have that vehicle operate properly, right? If they get that transition cheaply and quickly, and then I think a lot of different models will open up.
I'm actually puzzled by the form factor question a little bit. Actually, one thing I don't get about Tesla's prototype or whatever proposed robo-taxi is that it's a two-seater, a hatchback, very sporty looking. Most taxis that I've seen kind of in let's say popular media, like London taxi, is very boxy. It's very, very about, many seats and places to put your luggage and so on. I guess what I'm asking, are we just seeing roughly random prototypes here? Are we in the stage even of thinking about the design of a bespoke, as opposed to off-the-shelf robo-taxi?
I mean, I think it's a genuine criticism of the Tesla Cybercab. I mean, it does ergonomically for older people to get in and out of a low sedan is actually a problem. I think John Kravchuk was in an article recently criticizing it, and I don't really disagree.
My pet theory is that they just reused a design that had been shelved for some other purpose.
It's possible. But I mean, I think like companies like Zoox, though, have clearly designed very intentional with
the rumor was that Apple had something very much like a bread loaf. It was actually called a bread loaf concept, which is basically not a very interesting on the outside, but could be interesting on the inside because you got a lot of space to work with.
Well, if you look at both the Cruise Origin that was never put to use, and also if you look at the vehicle that Zeekr was developing for Waymo, you'll see a lot of commonality. You'll see this bread box design with slight variations, right? Because, and in fact, I think that, again, this is my personal opinion, that the U.S.-China friction that is inhibiting Waymo from adopting Zeekr and then, quote unquote, settling for Hyundai, it's actually a much bigger deal, again, for the economics than because, again, if you think about a handicapped person cannot get into an Ioniq 5 very easily, could get much more easily into a bread box system, right?
Makes sense.
This, by the way, is also the case why I have big questions about Tesla's robotaxi, because, you see wing doors, which actually are not quite gull wing, it's like feet forward. They may be good for hypercars, but not particularly good if you're driving in a city and you want to disembark on both sides of the vehicle, right? You're blocking traffic. So these are not very well thought of if you're thinking of a pure robotaxi use case.
Yeah, and I bring it up.
I mean, is AV technology not hard enough?
Yeah.
I mean, why do we have to reinvent the vehicle? I mean, I understand maybe in the future, but like, why are we trying to do both?
Certainly, and that goes back to the modular versus integrated question. If you're going to really get your hands around the whole problem, you might want to look at ergonomics. You may want to look at those things. And Tesla's case, I mean, they could have gone with a much more, let's say, bus-like architecture.
Yeah.
But that's hard. It's part and parcel of this whole question, because the economics is so dependent on scale. It's so dependent on whether you can crank these out by the millions, literally, is what you need. So why when we ask about it fully integrated, you're going to go all the way back to design questions and manufacturing questions, right? Famously, I mean, the Tesla, the London taxi was redesigned as an electric vehicle, but it was done with a Chinese partner, and keeping a lot of the characteristics of the space, etc. We got to talk a little bit about the elephant in the room, which is this whole problem we're seeing now with geopolitics and with international trade. How is that going to affect this sector? Do you anticipate there being very compartmental, or I should say Balkan type of solutions out there where the U.S. goes one way with a set of partners and then Europe and China separately?
I think it's already the way it is. I mean, there's China and there's the rest of the world, right? And I think that because of the data sharing, that's one of the constraints. I just don't see any change in that. I don't know. I'm not a geopolitical expert. I'm not sure it's gotten so tense in Europe that they won't share autonomy or anything like that. But I do think China has already been its own silo, and it's impressive what is coming out of China. It's actually quite concerning for the whole auto industry, but both on the EV side and the AV side. So.
In other technologies, we've always had things diffusing across borders. We've had the phone business essentially is down to 2 platforms, and they're both available everywhere pretty much. Maybe not so much based on cost. Usually there's differences, but it seems perverse to me that technology becomes balkanized on political concerns, and we end up not sharing and not benefiting from. Another case, by the way, is electric cars. I mean, although we might think as a global business, we see big differences because of trade barriers. The Europeans actually have much more choice today than Americans do, and arguably also Chinese have more. So the American consumer is in many ways sort of being punished here. Is this going to get worse with AI, or is it going to get better?
The only thing I would add to this is that the markets like certainty, right? Now, pick your level of tariffs against whatever border we're going to impose them, but tell us what the rules are, right? And I think that's really what most companies I speak with are looking for. Tell us what the rules are. Let us know that those rules are going to stick for a reasonable amount of period where I can make an investment decision. And I'm not talking about a public markets investment decision. I'm talking about a company investment decision. And I think that is where I've heard the most uncertainty and angst recently is the rules are changing, and we're not sure where they're going to end up. And even if we get an announcement, whatever announcement we got over the last half hour, does it stick tomorrow?
I mean,
right? At 4 p.m. or we get the same rules? I don't know.
Yeah.
I think the funny part, I feel like autonomy is the only part maybe that is certain for automakers. They don't know where they should build or plan if they need to, because if, let's say, it takes 3 years to build a plant. So by the time they move something out of Mexico to the U.S., Trump has 1 year left and they might be at a disadvantage. They also don't know what kind of plant to build because we don't know where the regulatory framework on EVs is going. So should they invest in an ICE plant in the United States or build an EV? So these guys are just in a total freeze at this point.
I also think that the various parts of this whole equation are going to be treated differently. So if you're thinking about the AI side of the stack, it will have different constraints than, let's say, the actual model of deploying robotaxis. Again, I'm looking into what's going to happen with Waymo in Tokyo, right? I mean, that could point some direction. But I think the different parts of what it takes to deploy a fleet, right? Having vehicles of particular type, having compute power of specific, having specific type of sensors, I think they will be treated differently. I'm actually could say that there is less risk on the sensor side. There's much more risk on the compute side. And if you want to offer level 4 plus autonomy, you need a lot of compute. You need the GPUs, and you need the CPUs, and you need the communication among them in specific ways. I mean, so And that is going to be constrained. And I think that's why you will see more regional development.
On that note, we're out of time. Thank you so much, gentlemen. And we'll all be available to some degree to talk later. But this has been great. Thanks very much.
Thanks.